Earnings just released from Palantir, and we can see that the stock is up massively on the news. More than 20%, continuing on a good trend. Year to date, the stock is up by about 50%. But why is the stock price up so much today? Well, the answer can be found in the earnings report. So just looking at the highlights compiled by the company here, we can see that their gap profitability is finally up there now. For losing money for quarter to quarter to quarter, we can see that they are now making money. And if one thing is true regarding trends in technology, we see that earnings, they can accelerate by quite a bit. Just look at Tesla earnings once they started to get going. So this is definitely a good sign for shareholders of Palantir, and we will see some comments on growth here later on as well. Total US revenue growth 23% up. I thought that this was something that was going to be about 40% quarter over quarter in the past, but in these dire economic situations with the rising interest rates, well, then 20% is not so bad all of a sudden. We can also see the revenue split between commercial and government, and that commercial revenue is growing faster than government revenue right now. So this is good for the business, finding lots of new customers. We see this whole AI thing, and with modular software that can be used in these new applications, we see a lot of potential for future business for Palantir as well. And in terms of contract, they added 64 new deals during the quarter of at least $1 million or larger. And these type of deals, they can be modular. So you sell something, you do a demo, you add parts of functionality, and then as time goes on, a customer success manager works with the current customers and continues to add on software to get the full functionality if the customer is happy with the software. So we can see some adjusted gross margin continuing to stay strong. We don't want to see this dip. If this dips, it's a bad sign, but high continuation in adjusted gross margin, a sign of strength from the company. So just to summarize here, ended Q1 2023 with 2.9 billion in cash equivalents and US Treasury securities. Why do they highlight this? Well, it's because of the macroeconomic environment where people worry a lot about the current debt load of companies. We can see companies that have a lot of debt have been absolutely slaughtered. Just look at the real estate sector right now. They're absolutely taking a hit no matter what country you're looking at right now. And I think this is why management want to highlight the strong balance sheet with no debt. And in my opinion, sure, I thought they should leverage in the beginning, but I guess I was wrong on this and management was right by sticking to a strong balance sheet. But I hope that once the macroeconomic climate starts to turn around, well, maybe they can put on some debt and start expanding more rapidly and get those faster, bigger growth numbers and just get a ton of money for the shareholders. So just to highlight, that's been it for this quarterly earnings highlight, looking at the surprise in earnings. That was the big surprise. We saw strong revenue growth for the macroeconomic climate, and we saw a little bit more than 60 new deals added in the quarter of a size of $1 million or larger. Alright, I hope you enjoyed me highlighting this earnings report here from Palantir, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.